So Federal Reserve did not announce a rate cut today despite of all the speculations and anticipation in the market that Bank of Canada announced a rate cut, ECB announced a rate cut, and now it's Federal Reserve's turn to announce a rate cut today, but it did not happen. So basically Federal Reserve kept the rate as it is, which is between 5.25 and 5.5%, okay? And the inflation came out, softer than the expectations, which is basically 0.1% below the expectation, and which is 3.3% year over year. For the month over month, it remains same, basically zero inflation for the month over month in the US. So despite of the soft inflation report, Federal Reserve did not cut rate. And when we look at the dot plot, which is the projection for the next 2 years or 2.5 years, they are now anticipating only one rate cut this year, 2024. At the beginning of the year, they announced 3 rate cuts they were expecting, and the market was pricing in 6 rate cuts. Now, their own dot plot is showing actually just 1 rate cut in 2024. So what does it tell you? It tells you that the US economy still, chugging along, right? So housing market still not really breaking as people were expecting. And the main reason is the mortgages in the US for the fixed rate is locked for 30 years. So a lot of people who purchased or renewed their mortgage before the rate hiking cycle was started, they actually locked those, historic rates for the next 30 years. So they're not selling those properties because of the same reason. And because the demand is low, so the number of sales is also low. So the housing market is kind of chugging along, guys, right? It's not really showing, big cracks in the economy. Yes, we have some issues in the commercial real estate for sure, and that could be one of the reasons where we will see the Federal Reserve, will start rushing towards the rate cut. But I think that's still not really coming to the surface yet. We have some regional banks in the U.S. which is, showing some signs of panic, but those regional banks will be absorbed into the big ones like JP Morgan and Bank of America and Wells Fargo. So that plan is, I think, going well according to the central bankers and the big bankers. So I think that could be one of the reasons why, US Federal Reserve would rush into if commercial real estate blows up, and that impacts the banking system, which of course impacts the other banks sort of the US, like in Canada or Eurozone. If that becomes a contagion effect, then of course, Federal Reserve will have to come in and rescue the economy per se. But as of now, like, it's still not coming to the surface yet. It's still under the hood. And if you look at, Bank of Canada's situation, they start cutting rates in anticipation that US will also cut rate at some point. But now it looks like US is basically pushing this, further ahead, and they may not be cutting in 2024. And if Bank of Canada continues with the rate cut, as they were saying, and the divergence between US Federal Reserve and Bank of Canada becomes wider and wider and wider, then this will have immense pressure on the Canadian dollar. And I'll tell you why. Because if I am a foreign investor, right, and I would invest my money into the bond market, and if you see the US bond market is giving me much higher interest rate compared to Canadian bond market, why would I purchase Canadian bonds? I would not. Okay, I would park my money, my capital into the US bond market versus Canada. So when you have interest rate lower compared to the other markets like US, then the foreign capital doesn't flow in your country bond market. So that will have an impact on the Canadian dollar and the bond market as well, which will be a challenge for Canadians and Mr. Tiff Macklem as well, because when the currency loses its purchasing power, then most likely it will push up the inflation a little bit, because when your currency becomes devalue against goods and services, of course the price of goods and services will go up. Okay, the only thing that can protect us if the oil price goes up. If right now oil prices is also not going up, right? If the oil price goes up, then it may provide a floor for the Canadian dollar to basically keep it up against USD. But as of now, oil prices is also going down because of geopolitical, situations. The Saudis are basically, not even cutting supply, so they are still keeping the supply on, and because we have lower demand in the global economy because of the recessionary fears, the oil price is still not really spiking up. So that may be a challenge for Canada. Are you a non-US tax resident and looking to open a business in the US? Well, this video is very important for you, so watch it till the end. Basically, if you are a non-US tax resident, which means you don't have SSN, which is your tax identification number, which means when you open a bank account or you open a Stripe account or PayPal account or Amazon business account or any business account, you need your SSN number in order to open any of these accounts in the US. Well, if you are a non-US tax resident, which means you don't have SSN with you, you can have another identification which is called ITIN. So ITIN is similar 9-digit number which is used for tax purposes if you are a non-US tax resident. So whenever you apply for a business account or bank account or payment processing account like PayPal or Stripe or even Amazon FBA seller, or registering a business in the US, you can use ITIN instead of SSN. This will help you to set up all of these things even though you're not a US tax resident. So if you're in Canada, Latin America, Europe, UK, Australia, or anywhere in the world, you can apply for ITIN, and you can use ITIN to register a business, open up the business accounts, open up the payment processing account in the US, and pretty much do all the tax related stuff using ITIN even though you don't have SSN. So how do you get that? Well, there are some companies available on the internet that will help you to get you the ITIN, but they may charge between $400 to $600 per application. We have a company called ITIN, and they are one of the quickest in terms of submitting the application. So they will help you out in terms of collecting the documentation, help you out in terms of answering your questions, and help you out in terms of submitting the application. Now, the typical application process times takes between 4 to 14 weeks, but the ITIN people only take 48 hours to collect the information, help you out in the journey, submit your application, and from that point onwards, it's basically IRS. IRS can take between 2 to 12 weeks depending upon their volume of the applications, but throughout the process, they will handhold you in terms of opening up the accounts, help you to open up the FBA account or Stripe account or PayPal account, or guide you in terms of the entire process. They're pretty quick to respond. They have people speaking English and Spanish and Arabic, and they can give you very competitive rates as well. Plus, if you use my referral link, which will give you extra $50 discount when you purchase their services. So if you are looking to open a business in the US, start your journey today, apply for ITIN. Even though if you're not looking to open a business now, you should have ITIN just in case in the future if you want to open a business, you're ready from tax standpoint. So check the link in the description below, and let's get back to the video. And let's talk about some inflation target as well. So why 2%? You should ask yourself, why 2%? Always you hear in the television and the news media, 2%, 2%, 2%, but why? You would think that this may be some sort of an academic research, the PhD holders might have run some mathematical models to kind of figure out, okay, what is the optimal inflation number that we should keep our focus on? That could be 2%. You think it will be some sort of a mathematical genius coming up with this model? No. It's basically just a random number picked up by the central bank in New Zealand in 1980s. So what happened in 1980s when New Zealand was running high inflationary periods, somewhere around 15%, there was a television interview, with New Zealand central bank governor, and he was asked on the television, okay, what do you think the inflation rate should be? And he picked up a random number like 2%. And since then, it became like a gospel among all the central bankers to keep the target at 2%. So this is a joke, guys. Really, you can look it up on Google yourself. I'm not joking. But so that's how this 2% came up. But this is really nothing but just a nonsense to keep a common person confused about that. And even if you look at inflation, trend is going down, but you would think, why I'm paying so much for these goods and services if the inflation is coming down? Basically, inflation is just a price comparison year over year. That's it. But if you look at the price appreciation since 2020, that has more than 3%. It's basically more than 20%, according to Bloomberg, as per this chart. And this is basically an average price, right? This is the way they calculate CPI. But if you look at some products, some items have gone 100% expensive since 2020, and those prices are not coming down. When people say that inflation is trending down, which means the prices are still going up, but at a lower pace. And those prices that have gone since 2020, it's not coming back. So that is permanent, guys. Unless we go into a deflationary bust, which is less likely to happen because central banks hate deflation, we don't see the prices are coming down. Okay, so whatever purchasing power you have lost, that's gone. It's not coming back. Anyway, you let me know what you think about that. How are you protecting your finances and your purchasing power in the phase of this high inflationary period? Even though the inflation is coming down, you're still losing your purchasing power. How are you protecting your purchasing power? Let me know in the comment section, and check the links in the description below. There's some free credits available for you guys to take advantage of. Give it a try, let me know, and hit the like button and subscribe, because that will help me immensely in terms of growing this channel. All of this is free education for you, so let me know what you think about that, and I'll see you in my next video. Bye. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.